Let's get some ideas for commodity trades in the week ahead. We are joined from the CME by Scott Bauer, CEO of the Prosper Trading Academy. Always great to see you, Scott. Obviously, a gloom hanging over the commodity markets right now from this virus.
Yes, lots of dark clouds here, and you know, the thing is, you look at technicals, you look at fundamentals, and you almost can't trust them right now because of the unknown that's out there.
Where are you seeing potential value? I mean, for example, copper. Copper was holding its own actually earlier today. Is copper a buy here?
You know, I think if you've been either short it or neutral, if you're short it, you probably want to cover. Mm-hmm. If you're not holding a position, probably not a bad place to step in and buy a little bit. I would not go full out on 100% allocation here.
What about energy? Is there any bottom in for energy potentially?
There may be a bottom in here. I don't think we're too far away from it, even with the fears of the virus here. So, you know, again, I think if you're short it, great place to cover it. You're in a great place. If you're out of a position, don't have one, absolutely a time to start allocating a little bit. You look at West Texas here, and it just broke below $50 a barrel for the first time in just about a year here. 50 is a number. It's one of those nice big round psychological numbers that the market looks at. Mm-hmm. 49.5, 49.40 is more of a technical place for people looking to get in, but certainly if you didn't have a position, this is as good a place as any to really start picking at it.
Why is that? Why do you think copper looks promising? Oh, sorry, I beg your pardon. Oil looks promising at these prices.
Well, I think what you have on at least the back burner coming to the forefront right now is OPEC more than likely is going to meet next week or in a week and a half or so. They're going to accelerate some production cuts here. I think that's going to put a short-term pop into the marketplace here. And then, you know, I don't want to say hopefully, but hopefully sooner rather than later, we do get some leveling off, easing of the virus. And if we do, you can see energy, you can see crude rip 10% to the upside overnight.
Well, I mean, but we still do have this risk of a glutted market, don't we? Globally. Obviously, demand is growing, I know that, but not at the pace the bulls would hope.
No question about it. I agree with that. However, if you look at the supply demand, if you look at the glut, you know, we don't know what the quote unquote fair price of crude is, but it's probably in the lower 50s, you know, 52, 53, that trading range that we've seen over the last year, which we're now at that bottom range, was really 50 to about 62, 63 or so. So that's what I'm looking at right here. And that's why I think crude is a great place to step in here.
What about the farm products? Because the fear here is that if China's economy weakens enough, they can't follow through on those promises to buy tens of billions of dollars worth of your agricultural exports.
And I think that's very valid, and I think there was probably some question to start with regarding that phase one deal, if China was even going to be able to uphold that amount. So I think in the news, in the press, the agreement was, you know, a number that was X, but I think the reality of it was they were not going to be able to meet that level anyway. So, you know, I think they need to be mildly cautious here, but I don't look for a big downturn there.
If you had to go into one of the farm commodities, which one would attract you? Soy, wheat, corn?
I'd probably go into soy just because it's been battered down, and also because the upside there, if China is able to recover a little bit, is so great.
Does this remind you at all of any situations we've previously seen? I mean, it's such a moving target, how much damage this virus is going to do to the Chinese economy.
You know, I'm going way back in time, and this is not a biological or a virus-related incident. I'm going back to the turn of the millennium, the 1999 back into 2000, when everybody was concerned about what was going to happen from a technology standpoint, and there was so many, you know, fears that were overblown. Again, completely different. You're talking about life and death here, a virus versus that type of situation. However, the market reaction, the psychology of the market, very, very similar pattern.
That's interesting. Always great talking to you, Scott. Thank you very much. Have a great day in the markets yourself.
You as well.
Scott Bauer joining us there, CEO of the Prosper Trading Academy. Thanks very much indeed for watching.